Okay, we're live. Yeah, so my camera is not working. I just want to fix it. Roy, how's it going?
Good. The real reason why his camera is down is, Tevis is too sharp looking, and so like if he's next to me, it makes me feel uncomfortable, and so he's doing this as a service to me. So I appreciate that. Nice guy.
It's so like awkward to use my I use my phone as my camera. And so sometimes it works, sometimes it doesn't.
Yeah, I've been. So I was always using my workplace camera before because it's here is easy, nothing special, and using this one, so it's a little bit different. I'm like noticing the back. That stuff. I'm like, I should have taken care of that. Whatever. We are here after many weeks. Tevis has been conquering the world, one country at a time. There's a lot of new elections in different places, and I think every place that had elections voted Tevis for president. So, United States is coming next in November. Vote Tevis 2024, and of course Canada. So. Yeah, I started a new job, so we're trying to figure out the schedule, guys. So it's a little bit later than normal, but man, we won't go too far in the past weeks. There's always a lot to cover every single week. Did we hit a new all-time high again today in the S&P 500?
Did we?
I know the Nasdaq was pumping. My goodness, it was pumping. It was one of those Wednesdays are busy for me today, and I like every time I look down, I'm like, what in the world is it doing? 2% for the Nasdaq, 1.19 on the S&P 500, new all-time high. Yep, again. So it just keeps pumping. Tom Lee, of course, and many other bulls are very bullish, and even bears. We missed this a few weeks ago. Mike Wilson, which is probably the most prominent bear, capitulated. He said, "You know what? I'm done with being bearish. Let's go." And of course, his bullish target was pretty bearish. A lot of what's driving that, and what we'll talk about tonight, hopefully Tevis can get his camera fixed, is Nvidia. It's insane. You own any Nvidia, Tevis?
I wish I did, but I don't.
We know somebody that owns some, a good bit.
What, Tanner?
Yeah.
Yeah, I mean, I was on with him last night, and he was saying that he had to actually trim some Nvidia because he wasn't sleeping okay at night. Like it was just completely disproportionate to his portfolio.
Oh yeah. And Tanner is not the type of guy that is okay, just letting 50% of his portfolio be one thing. So I don't know if it got that high, but it probably wasn't far from that. Congratulations to him, by the way. I think Tanner is too Canadian because, there's Canadian nice where people are insulting him because SoFi's down or something like that. And PayPal's not looking so good. And then they miss things like, dude, the guy bought Nvidia when it was like 100 something bucks. Like, and he owned a lot of it. So, SoFi could go to zero and it's a huge position for him and he'd still be up a lot. Like, I don't even want to know what his gains are. They're filthy. So yeah, congratulations to him. But when a stock that big pumps, and of course now Nvidia has overtaken Apple as far as market cap, it pulls the whole index up with it. And so that's part of what's happening. Of course, there's other stocks that seem like they trade in sympathy with that. So what do you think, Tevis? We're at 13. Let's see where we finished up. I know after hours it was pumping. Actually, I'm going to look up Robinhood, the overnight trading, even though those numbers are, sketchy. Where do you think it goes to?
Nvidia?
Yeah.
And people are calling for like $1,500 Nvidia now. It's I don't know, man. Jensen Huang is out here signing tits. It's like it feels toppy. I don't know. It just you get attacked for saying something like that, and that itself should be a sign.
Not sure if that'll show up for you guys or not, but 12:40 after hours. Yeah, it's I don't know. For a long time when Nvidia was trading, even when it got to 1,000, I'm like, it doesn't look overvalued to me. It's starting to feel that way. I know they're growing a lot. H200s are coming out. Elon Musk even mentioned, I don't know if it's H100s, H200s, but Nvidia directly. And it's one of these companies where they've done pretty much everything right. But even in those situations, so we talk about being priced to perfection, right? When a stock just keeps pumping and pumping. And you accused Palantir in the after hours, by the way, great show. If you guys are subscribers with Tevis, be sure to watch that one. It's me against two Palantir bears. They're not really bears, but they will be proven wrong soon. So, but they accuse Palantir of being priced to perfection. But something like Nvidia is getting to the point where it's perhaps priced beyond perfection, where they've had ridiculous earnings. My thoughts on this, I don't know where the top is. I don't know when it reverses. I don't know that they're doing a split. Maybe it happens after that. But what's going to happen is they've grown phenomenally from about a year ago. That's really when things started accelerating meaningfully for Nvidia. And those comps become more and more difficult. You can't grow.
Roy, let me restart my laptop real quick. It'll take 2 minutes. You're
Sure.
gonna solo carry
Yeah, I'll
the
talk
stream.
Palantir.
Okay, cool. Talk Palantir. I'll just restart and I'll be right back.
All right. I am in the driver's seat now. Maybe he's gone. Yeah, as far as Nvidia, it's one of those things where the comps become harder and harder, and I think at some point it's going to correct. That doesn't mean that it's not going to go up from here long term. So I don't know if this will let me do this or not, but I wanted to show you guys some Palantir stuff because I am the captain now. Look at me. I am the captain now. Let's see here. Share. Does it work? Can I approve it? I cannot. I don't have permissions. Okay. So Palantir announced a AIPCon. If you guys are not used to Palantir, this is something that they do that shows off their AI platform. And the cool thing about it is it's not them showing off their AI platform. Like they do talk for a little bit, but most of it is customers that are actually showcasing all these different products. They tend to announce these very close to the date. So they announced it, I think, after hours. It was when I was busy with something at work. And it's tomorrow. So tomorrow, 11 a.m. Eastern time. It's on the Palantir channel. If you're in Palantir or you're interested in Palantir at all, watch that. Because what's happening is there's 70 customers that are there that are showcasing their products. It's a live stream. You won't hear from all of the customers and clients. But the way they talk about Palantir and the company, you would think, A, that it's a cult. And it is, for sure. Like I'm a cult member. But B, like that this is just the greatest thing since sliced bread. That you hear a little bit with Nvidia, but you really only hear people talk about companies like this when they're doing something phenomenally different. And so there's 70 companies. They're announcing some new customers as well. And one of those was Wendy's. I just thought that was cool. So United Airlines, there's a couple of healthcare ones. Major companies are growing and scaling. There was another announcement by Tampa General. They might update the number of beds that Palantir is controlling. Thank you. There we go. And then this is the other neat thing. So we were talking about this in the after hours. And so boot camps. So it used to be Palantir had the same problem that SoFi had, where it's very, very long on the tech side. Very, very long sales cycle. Like it takes a while from pilot program all the way up to actually landing the client, and then you got to get the revenue. And so it's land and expand. They actually have 3 different phases back then. And so Palantir would do good to have 100, 120 pilot programs per year, and not all of those would convert. The conversion rate, we didn't know exact figures. I think it was somewhere maybe around a third. Seems about right. Last year, about this time, a little bit before this time, they announced the AI platform. And then they announced this boot camp strategy. And, it's not the only ones doing boot camps. There's others that have followed this because it's been so successful for Palantir. But instead of this long phase of months, maybe even years for the pilot program, it's basically 1 to 5 days at one of these boot camps. And it converts clients successfully because they have real results the way that they're doing it. I won't go into all the details. I have many of those posts. There's a lot of videos out on it. But it just the sales cycle itself has sped up so much that they're able to scale and actually they have customers now leading their own boot camps for other potential customers. It's insane when your own customers become your salespeople. You're doing something freaking right. And so here, remember they did like maybe 100 pilot programs per year since its launch a year ago. 1,300 AIP boot camps. These are not just in the United States, but internationally as well. And 500 additional ones from 3 months ago, back in March. So Alex Karp set a goal for 2,000 boot camps. And I thought that when I first heard that at Bloomberg, I'm like, no, they didn't mean 2,000 like that. That's way too many. No, they meant that. They'll probably exceed that, actually. It's crazy. You land these clients, it takes a little bit of time, probably about 2 quarters for money to actually come in. They scale from there too. So a lot of these that land, they're like, oh, we'll just use it for this. And then they're like, hey, this is an amazing product. I'm going to use it for freaking everything. So big thing. If you're interested in Palantir, tune in. If you're curious, if you're an investor, if you're like Tevis and you're shorting it, I'm just kidding. He's not shorting it. Good luck. But I seriously, I've covered calls and I'm like, I might want to pull back from those. Plus, this Friday is S&P 500 rebalancing. So Palantir is eligible. They were eligible last quarter. I thought it was a little bit early. I think that there's probably a 30% shot that they get in this quarter. And I think it goes up, the further time goes on. No guarantees, but it's just one of those where I'm like, I should get out of my covered calls. So that's just me. That's where I'm at. What do you think, Tevis? You hear all that?
Yeah. Palantir to the moon. I heard it.
That's right. You got it, buddy. Buy a share. You want to.
Okay, so now let's talk about Nvidia then. Yeah. So as a percentage of the actual index, Nvidia is like staggering in terms of how much it's just carrying the entire market on its shoulders. It accounts for 43% of the S&P 500's gain year to date. 43%.
Has that ever happened before?
That's insane.
I don't think that's happened before, like ever.
I maybe it's not. It's definitely up there for sure. It's up like 10x from 2 years ago, from the October 2022 lows. It's just insane, dude. Like over the last 10 years, it's up like 250x.
So the last company to go this parabolic that grew that large as far as market cap was Tesla, but that was in a raging freaking bull market. And so I don't think that it even got out of the single digits. I know it wasn't included in the S&P 500 for that whole run and everything too, but I don't know that there's ever been a time when one company has done so much over, not quite half a year, but we're close to that. Probably won't hold that way. Like I think one thing or another is going to go, either it's going to have a pullback, and I think it needs to at this point, or soon, but I'm not going to bet. I'm not going to make that bet, or the rest of the market's just got to pump. And I would be good with that because I'm in the rest of the market. So
yeah, I'm not sure. Like, again, you were sort of saying this just as I was leaving, but it's like if I were starting a position right now for the first time ever in Nvidia, just because I saw it online and people are talking about it hitting all-time highs, and let's say I logged in yesterday onto X and I saw Jensen Huang, autograph some woman's chest, and I'm like, okay, like this seems like a company I want to be involved in. Like the risk that you're taking on for that versus the potential reward, it's just insane. And like, I said it at 1,000, I said it at 800, it's probably going to hit 1,500, and I'm still going to say it. And people are going to say, oh no, absolutely not, because this is like, a new wave, AI this, AI that. But at the end of the day, like we have talked in the past around the largest companies in the world, like Tesla, for example, said they're spending 3 to 4 billion on chips. Like those companies, first of all, it's going to be like similar to Apple, right? Like there is a cycle of demand for the sales, right? Like it's not going to be a steady. Right now, they're super supply constrained, and so they can just call whatever price they want, and they have absolute pricing power because everybody needs whatever they're selling because there's not enough out there. That's not going to be the case in a year, 2 years, 5 years time. Number one, all the major companies right now are going to be working on some in-house solutions. And then number two, it's going to be, you sort of fill up the order forms across the board from the market, and then the demand is going to fall because you have these impossible comparables year over year. And so you could be in a year in 2025 where Nvidia, like, how is it going to keep up a 100% plus growth rate 2 years in a row as a $3 trillion company? Like, it's so impossible to
Throw
achieve.
up that throw up that comment by Dat Win, the Nvidia at 3 trillion.
Okay.
That's
Nvidia is at 3 trillion. Let's say they will beat Microsoft and get to 4 trillion to be the biggest company on earth. That's still only a 33% increase. Well, the risk is tremendous. Yeah, exactly.
And I mean, 33% is great. If you get a return on that, like, I know that they've done a lot better than that, but anytime that's like, so if that's not nothing, but he's right. Like, this could go down at some point by 50%, and it wouldn't be completely crazy. I don't think given the growth rate of what they've done, I don't think that they're like insanely overvalued yet, but I do think that they're overvalued. I think we've gone past that point. Like when we hit 1,000, I'm like, no, I still see, there's reasonable upside here. And if you're long term, like now I'm like, come on, man.
Well, yeah, like
But
it hit 1,000, then it pulled back to 800, and people are like, "Oh, there it goes," and then it just like skyrocketed again.
yep. And I mean, I'm seeing a lot of bots on X
Mhm.
and YouTube channels and stuff pumping this. And there's a lot of people that I don't know how you'd not know what they do, but that probably have no freaking idea what they do. And it's like a meme stock. It's not like they're legitimate. They're doing amazing things. But there's a point where it's like, okay, what's the risk here? And it's a lot, especially when you get more people that don't understand the value of the company. That like if they go down 10%, like they freak out and they just capitulate. There's probably, and the higher it goes, the more of those folks that there's going to be. So just be
So
careful.
let's say Nvidia, like, I won't go as far as to say they miss a quarter, but let's just say they meet expectations.
Yeah.
What is the market reaction to that?
Well, I think meet expectations will happen at some point, or slightly beat. And then that comp, because they've been growing so aggressively, will not, the rate of acceleration will start to slow. Yeah, I think there's a pullback at that point. It could be irrational. Like the market can be irrational to the upside and also to the downside. So, like we saw, I'd have to look back at the chart, but I was actually getting very interested. Of course, I should have bought it. Let me pull this up. Nvidia chart.
Like, what we know is we know the market is absolutely ruthless when it comes to things like this, because we've seen companies that triple beat and fall like 20-30% because they issued softer guidance or something like that. Um, and especially the higher this thing goes, the more those expectations build, and it just becomes really scary, I should say. But again, you don't know where the top. It's like similar to, where's MicroStrategy at? MicroStrategy, when Bitcoin hit 70,000 for the first time, and Saylor was, doing his whole raising money, buying Bitcoin. It increases the price of the stock. The stock goes higher. You can raise more money. Like when he was doing that, like people were like, "Oh, MicroStrategy 2,000, MicroStrategy." Like, it's okay. Then Bitcoin fell for a little while, and MicroStrategy went from 2,000 and went to 950, and now it's back to 1,700 again over the course of the last couple months. Nvidia could definitely have a similar pullback, but again, it depends on the results. I don't think it's going to happen in the short term. I think in the next quarter they're going to continue knocking it out of the park. But I'm saying like 2 quarters or 3 quarters from now, when you get into some of these comparables that are much harder,
Mm-hmm.
like we saw it with Celsius, right? Like Celsius goes from like up 100 and something percent, up 200% in terms of growth to now being up 50%, then people are like, what the hell is going on? It's like, yeah, it's 50% off of the last
which
200%.
is great. It's amazing, but you know, there's unrealistic expectations built in. It's like this will go up 100% forever. It's like no, it can't. It just does not work that way. And the larger a company gets, the larger the market cap gets, the more and more difficult it is. So Nvidia is doing great things as a company. The stock is, I don't know, like you could probably still make some money on it, but you have to be careful if you're getting into it at this point. Yeah, especially I don't know. So let me ask you this: do you think it becomes that it overtakes Microsoft this year in terms of
Yes.
Microsoft? Okay, yeah, me
Yes.
too.
It's just got momentum, man. And like once
Yeah,
that snowball is rolling downhill, like there's nothing that's going to stop it. You know, dude, you had this thing. It's a $3 trillion company. It was up 5% today.
yep.
Like, what is going on?
And we had a day back in our hiatus from Bootleg where it felt like every single freaking stock on the planet went down except for Nvidia. That one, like it is like, okay, is everybody selling everything else and going into this company? And so thankfully today was not one of those days, but yeah.
Yeah, like casually just on a random Wednesday adds $150 billion to their market cap. Like, oh yeah, we just added 3 Palantirs to our market cap today. Oh wow, there must have been great news that came out today. Nah, not really.
There is great news. It's Nvidia.
Yeah, exactly.
We're
Buy
still
because everybody's
Nvidia. Jensen Huang has this massive conference. He's being treated like a rock star, and deservedly, I might add. Like he is a freaking genius. They've executed well. They've made the absolute most of this time. Like he deserves all that's coming to him. So no hate on that guy at all. He's awesome.
Mm-hmm.
Apple though.
Okay, so let's talk about this. Yeah. I'm really excited actually for Apple because WWDC is around the corner. And like I think they've been hyping that up because everybody has played their hand from an AI roadmap perspective except for Apple.
Mm-hmm.
And so it's just a matter of seeing what Apple has to present, what their contribution is going to be into this whole thing, and what their plan is going forward. And that's really going to set the tone for their, price movement or stock movement over the rest of the year. And we're going to find that out in next week, I think, or in 2 weeks, basically this month.
Yeah, it's coming out in June. I don't remember the date. I'm not. You invest in Apple, right? You got a little bit.
Apple is the largest dividend holding that I have.
Yeah.
It is actually number one. If we're counting crypto, number 1, 2, 3, 4, 5. It's the 5th largest position that I have behind Tesla, Bitcoin, SoFi, Ethereum, and then it's Apple.
Wow. Is that for you mostly like an AI play, or like what are you banking on? Like why are you so heavy in Apple?
So when I was making the dividend account, it was either I wanted to have some level of growth through the FANG stocks, and it was Microsoft or Apple really because the other ones don't have a dividend. Well, I mean Google I think does now, but
And
they
Meta
did and Meta they didn't.
and Nvidia, even though it's not Fang, but it
Yeah,
technically has a.
dude, Broadcom is like one of the best performing stocks for me in the dividend portfolio since I opened the account like mid-January. So I'm really happy with that. But my point is that it was Apple and Microsoft, and I owned them both. And for Apple, it was just a laggard. And I saw like I don't think it's going to remain a laggard, and so I just thought there was more opportunity in Apple to regain some of that momentum from a just valuation perspective. And so I've been buying up in the 170 range. It's still new, right? Like it's my what 5th largest position, I guess, in my portfolio, and I only started buying in January. That's not meaning that I'm like hand over fist buying Apple. It means that it's my 5th largest position at 2.6%.
Yeah.
You know, Tesla, Bitcoin, SoFi is 26%, 18%, 17% respectively.
Yeah. Yeah. Well, me, I have 5 positions. So if I'm like, hey, it's my fifth largest position, it's like that's less than 1%. So, uh, yeah, for me, I don't know, man. I go back and forth with this. So I've often thought that out of the Magnificent Seven, Apple will be the laggard, or Google. Google is, I think, done a little bit better recently, so I would put that on Apple. But I don't know. What concerns me with them, and we've talked about this in the past. I don't know how innovative they really are. They seem for the longest time, at least with their hardware, for the most part, to follow what others have been doing. And I'm not an Apple fanboy or anything. I've thought that they have basically copied a lot of features from Samsung and from others as well for years and years and years, and that the actual hardware is not great. We saw a number of failures on Apple's side as far as products, and Vision Pro I think is neat, but it's not. I don't know. I don't know how well accepted that's going to be, how well it's going to scale. There's initial excitement, a pop, and now it's like it's kind of a fade. Like people have forgotten about it. It's not in, and maybe it turns out great in years. I think I think they'll be fine no matter what. Like they have a lot of cash. They're conservative, and people are embedded in that ecosystem, so they can just pump services left and right. And there's still Apple fanboys that'll buy nothing but Apple, even if it costs them an arm and a leg, perhaps literally. But I think for meaningful appreciation for Apple, it's going to take this AI execution. My concern with that is, there's two weird things. One is they shelved the car project, which took like 10 years, and they put people from the car project onto AI. That doesn't make a lot of sense to me, at all. Like, just because someone failed at doing an EV, why would they be good at AI? Maybe there's just a few. I don't know. That's odd. And then the other piece is those talks with Google and also OpenAI as far as using their AI platform products, integrating with their phone. Which, I mean, no hate on that. Samsung basically does that with Google. I don't know that Apple can do that in house on their own. Siri is just such an underperformer. There's an opportunity even with the integration if they do that well, but if they try to go their own route, which I think that they're hinting at, oh,
So
no,
there's three things I want to say. Number one is with regards to the car project being cannibalized into AI, that's only a small portion of the team. A lot of those people were let go. And it's just like they reshuffled a lot of people, but they did keep some talent in house. Number two is I think the perception of Apple as a safe haven in the market has been watered down over the past several years, at least with the advent of AI, because it seemed as though if we backtrack to let's say 2020 or let's say 2022 even, Apple was like the largest, the most widespread holding across, Congress people, everybody who wanted to have like a cash-like position went into Apple. The beta was so low for it, like it wasn't so volatile. And I think with AI, now that's changed a little bit because Apple is not your first thought when you're thinking of like what is a cash, position. If I want to just park my money somewhere and see how the market plays out, you're not parking it in Apple, right? And so that's the second thing that's changed a little bit. I think with Apple, however, Roy, there is definitely a path. And the path is this. If and it's a big if, right? Like capital I, capital F, if WWDC is as exciting as I hope it's going to be, and quite frankly, that one event makes or breaks the AI bull case for Apple because they have like it's a chance at a first impression for their AI roadmap, right? Um, but if it is impressive, then you can imagine a world where that software triggers a hardware refresh for the new cycle of devices because you need the hardware to support whatever the if it's a revamp of Siri. And which, by the way, GPT, when they launched the GPT 4.0, I noticed, and I think I tweeted about this, like every single one of those clips, every single one of those presenters were on iPhones. There was not a single one on Android, which was interesting because I can imagine a world where instead of Siri, I have Sky, and it's all powered by OpenAI, and that links to my network, and that network has been the number one value proposition for Apple, is just their entire walled garden, because I have all of my devices interconnected. I have my iMessage and everything, all my data is in the iCloud and all that stuff. So if that's all connected and it learns about me, it has contextual knowledge from the ecosystem that I've been a part of for quite a while, along with the advancements that OpenAI has made, then that's a very powerful sort of thought if you embed that into every iPhone. The iPhone is a Trojan horse into the household, especially in North America. And so all of a sudden, let's just say they roll that out, but in order for optimized capabilities, you need the M whatever chip in the new iPhone, 15, 16, etc. Everybody's going to buy that phone. And so you see a path for software being the prelude to hardware cycle refreshes if the AI capabilities are tempting enough, or actually tantalizing enough for a user. But Apple really has a lot of things playing in their favor because they have all of that context, and because they already have devices that are a connected ecosystem into most North American homes, I would say.
Yeah, I mean, the opportunity is there for sure. I just don't know that they can execute. That's my question mark. And if they can't, it's a major misstep trying to go their own direction. Uh, I don't think that they can pull it off. So let me ask you this: if you're not very impressed with that product roadmap that they throw out, what are you going to do with the position?
It depends. I might rotate a lot of that position to Microsoft.
If you want an AI play, I've got a company I can suggest you.
No, I want a dividend company, Roy.
They'll pay dividends in 10 years.
So yeah, and by the way, guys, WWDC is, I think, next week. It's June 10th to June 14th. I don't know why it's 3 days, 4 days. There's usually like one main event, but yeah, it's going to be coming up very shortly, and we'll see what comes out of it. I might be, making some changes to my Apple position. We'll see if the stock, how the stock reacts if it takes a hit. There is expectations built into this event, and we'll see if they deliver. Nvidia stock split is June 10th. Apple's WWDC is June 10th as well. Next week might make or break the market.
Speaking of breaking things, so there are further hints of rate cuts. A lot of the numbers that have come up, jolts, earlier this week, I think it was yesterday, it might have been late last week.
Okay.
They are looking like rate cuts are more likely. Now, I think the most common, we've gone to, I believe, do we have the probabilities? I think we shared that with each other.
Can we take a moment to have the Canadian rate cuts decision?
Yeah, go with that. Lead with that.
So the Bank of Canada cut by 25 basis points. It's one of the reasons why the market was green today, because it just is more bullish for the US to take note. And I think that the probabilities increased for 2 rate cuts. Let me see if I can pull that up, actually, because I shared it here with Roy in our private chat. So markets are now here. Let me present. Markets have now priced in an additional rate cut in 2024, with prediction markets now showing 2 rate cuts this year. Meanwhile, the odds of another hike are down to 8%. The odds of 0 rate cuts in 2024 have dropped to just 28%, and the odds of just 1 rate cut are down to 25%. So essentially, the Bank of Canada cut interest rates today for the first time since 2020, and this really got people excited. It got people hopeful that the US is going to have more rate cuts this year. And obviously, that's what sends the markets in an upward trajectory.
Another big thing that hit too, and it's related to this and also the jobs data that came out. The DXY, if you're not familiar with it, it's basically the United States versus compared to all its strength compared to all the other currencies on Earth. So obviously, there's some it's doing really well against, like the Japanese yen, and some that are not. But this just kind of gauges it. Let me blow it up a little bit. And yeah, this doesn't look like a meaningful drop from May when we were hovering at 106, actually just above, to June here a month later. But that is like if you zoom even further out, the dollar has been trouncing, and you can see how strong it got back in 2022. Most other currencies in the planet. This puts a lot of pressure on companies that have a lot of revenue. They're based in the United States, but they have revenue internationally because they have these contracts that are in the international currency, and so they get less and less money the stronger the dollar is. That's why some companies like PayPal actually report revenue, and they're like, "Hey, this is the actual revenue we got, but if it was FXN dollar neutral, so down to 100, which we're still a good bit above that, here's what we actually would have gotten." And so as this actually falls, and I know this is 3 years, but if we look at the 1 month, you can just see the trajectory. I mean, it's not doesn't look like much, but this thing doesn't move very fast. This is good for equities as well, and it's not all just because the rate cut stuff. So hopefully that continues. And I know, at least as a U.S. Citizen, it's like you would think a strong dollar is like the best thing ever. It's like it's really not. You don't want like a super weak dollar unless you're doing a lot of international traveling or something, or you invested in currencies. But yeah, this was another good thing. A lot of commodities, although today they spiked up a little bit. Silver, gold, oil. I didn't look at. They've been falling. Oil prices are they been falling in Canada, or are you?
I don't follow oil prices in Canada, man.
I mean, like gas prices at the pump. They've been usually related to.
Yeah, I have no idea. I don't drive a car.
Yeah, I mean, I drive a Tesla, so I'm in the same boat. Yeah, WTI is up a little bit, but it's 74.47. So that's I hate when it does that.
I wanted to throw up this chart. I was actually talking about this with a friend earlier today on the Bank of Canada decision. It's ballsy, right? Because they have a pretty volatile situation because our housing market is so inflated that they have their hands somewhat tied, where they can't hold out as long as the US can. This is interesting. Historically, the delinquencies shoot up after the first rate cut, which, I mean, we kind of all know anecdotally. So this is total delinquent mortgages in Canada, and they all spike after the first rate cut, which just happened today. This thing has been going up, even before this. So we get a rate cut. We'll see what the next couple of months bring. But, I think that it won't bode well for the real estate market in Canada, especially if the Canadian dollar loses pricing power to the US dollar. It's just going to be kind of a shit show up here.
Yeah, I don't know if the reason that delinquency spike is because they cut too late. If they're like our Fed, that's usually a reason why. By the way, that when you cut rates, you see equities fall, is because horrible things are happening in the economy. So that might be a factor. But throw this up, please, Tevis. This is the other side of it. So you have Canada doing rate cuts, and then the European Central Bank set to cut before the United States, leapfrogging them. So the more other countries are cutting around the United States or that are connected to the United States, and we have a lot of relationship with the EU, the more likely rate cuts are for the United States too. You don't want to really be the last man standing when and it's okay, depending on the size of the cut, whatever. But yeah, I don't know. There's a certain company that we're in, and we'll talk more about it on Friday, perhaps, because this relates to it heavily, which doesn't need rate cuts. And SoFi is doing great as a business, but the stock itself and the narrative is very much tied towards rate cuts. The other thing too, are you invested in the Russell at all, the Russell 2K or small
No.
caps? I'm not. I think that I might take a small position in that in about a month. I'm still waiting for my funds to roll over. It's an index fund, so it's like, what's the worst that can happen? Well, the worst that can happen is opportunity cost. But and if you look at the Russell, it has been beaten up. Tom Lee, of course, was predicting, I believe, a 50% increase over the year, more in the second half. A lot of that is bound to rate cuts. A lot of the companies that are in the Russell 2K are not profitable, not necessarily growing by leaps and bounds. I don't know. It's an interesting play. We'll have to see.
It's a consolidation, right? In terms of the gainers for the market, because it gives this false narrative that we're flying high when the S&P 500 has like 20 days in a row of hitting all-time highs, and then you find out that Nvidia is like 40 something percent of the gains year to date. 43% of the S&P's gains year to date. And so it's one of those similar situations where it was 2021 was similar to this, where a certain number of stocks have an outsized gain that brings up the index, which is great. But then there's a whole like that K-shaped recovery narrative, right? If you remember that one, Roy, there's a whole side of the market that hasn't recovered and
Yeah.
is still trailing quite close to those all-time lows. SoFi included.
And Danny, yes, reverse SPAC merger with your YouTube channel. Absolutely. Let's do that. Throw this up, please, Tevis. This is the Russell 2K. There are other small cap indices. This is the better one. If you look at the narrative, you look at the NASDAQ, the S&P 500, the Dow Jones, those all keep hitting all-time high after all-time high after all-time high. All-time high was back in late 2001 for the Russell 2K, and it's not anywhere close. We're down by about 20% right now. Yeah, rate cuts I don't know where this would go with rate cuts, and it depends on the cuts and the reason for the cuts. But it certainly helped this. So, yeah, I don't know if Tom Lee is right about 50%, but I could definitely see it hitting a new all-time high if we have a number of rate cuts coming, depending on the reason. A lot of things will change.
Yeah, big if. I mean, and even that, like, it's gonna be so choppy. I'm actually excited for it. Quite frankly, it's gonna be so choppy because you're heading into an election, and you're expecting two rate cuts, and you don't necessarily know when the first one is gonna come. But again, you're only expecting two rate cuts today because of the Bank of Canada's and the EU essentially being more dovish. But who knows, right? Like next week you could be back to one rate cut, or something could happen with the inflation numbers that comes out. And remember back in January, what we were expecting, like four rate cuts, more than that. So it remains to be seen.
Yeah, everybody not named Anthony Noto was expecting that. So kudos to SoFi. I mean,
anything else for us to chat through? Any other topics?
You had that note about Apple TV heading to China. Did you want to talk about that? I know we kind of talked about Apple already, but
yeah, I think we talked about Apple. Like I said, like I think we can do a longer episode on Apple after WWDC and take a look at what they're really proposing. I'm gonna be going out on a limb, and I'm gonna say there's gonna be some partnerships. There, whether they announce OpenAI partnership or whether they have some other partnership planned. They usually name drop stuff at that event. So I don't know. I'm excited for that event personally. Tesla's vote is also going to be next week. If I think it's next week.
It's very soon. Let's see.
I did recently vote my shares. That was a fun experience.
Was that through Say Technologies, or how did you vote?
No, there's this website called proxyvote.com, and you just put in your control number, and then it says how many shares you own, and you just vote from there.
Yeah, mine. I need to double check if I voted. I think I'll do that tomorrow.
Thoughts on Broadcom up over 6% today? Yeah, I mean, look, if Nvidia's up, AVGO is going to be up as well. Like that entire sector is going to be up. I have no thoughts in addition to that. I own it. I love it. It's quite nice to own it. But again, it's in my dividend portfolio, and that has a drip on it. It's every dividend is reinvested into that same stock. Other than that, I haven't really bought Broadcom since like maybe March. So I'm quite happy with it.
Broadcom is one of those. Actually, somebody brought this up to me on June 4th. So yesterday, it's been a busy week. Throw this up, please. When I was, I like PayPal a lot. Stock has been absolute garbage. Company is doing very, very well. The CEO actually had a presentation today. They smashed Q1 earnings by leaps and bounds. Most people don't realize that they grew 23% EPS over 23 and 27. I can't remember which is GAAP and which is non-GAAP in Q1. Had the highest ever free cash flow that they've ever had. Barring for one-time exceptions from selling something, and massive buybacks. Of course, there's innovation rolling out, and I looked at that giving like an 18% lift here. But his argument was, and I don't get it at this point. I get it, in the past, but Broadcom, great company like Nvidia, but it's just sector related. Like they're doing well, but he's like, hey, 60% margin, 30 billion of cash flow. The valuation matters, like at some point. Great business, but so here with AVGO, it's 33 price per free cash flow. This is before it ran up today. So it's probably like 36, 37 over a 2 peg. Like that's not terrible. Like you could buy it and invest in it for years to come, but there's a lot of forward price, a lot of valuation appreciation that has been done and stolen from the future. And you talked to me about that with Palantir. I disagree because, I don't know. We won't go there, but Meta, I was like, hey, Meta's a better buy here, but PayPal is sitting at a 13 price to free cash flow and a 0.59 peg. Anything under 1 is usually considered a pretty good buy. The lower that is, the better it is. So price earnings of growth. And PayPal is being priced like it has no growth at all. And yeah, there it is, the 22% EPS growth, 11% revenue growth. That's not revenue neutral either. And a lot of first look products. I did the calculations elsewhere here. You'd have to look at my post, but 18% lift from transaction margins from just 3 of the 7 first look products. That's not including their PayPal complete payments. That's not including their stable coin as additional vectors of growth. And there's a lot of other stuff they're doing as well. As like, I get that AVGO is great. I get that Nvidia is great. But at this point, for both of those, I'm like, I just can't buy that unless I wanted to hold it for a decade. And I don't know that I do. So I'd rather be in things like PayPal. I'd rather be in things like SoFi. Robinhood, I still like, even though it's not cheap anymore. Palantir, just because I know that company very well. You get to a point like Tanner was feeling, like if you can't sleep and it's causing you chest pains or nightmares of like you have this amazing amount of money that's there, you got to take some profit, if that's where your mental health is. And you do you. Not financial advice as always, but it's okay to take profits, guys.
So I know what I want to talk about next.
Sure.
And it is this comment right here.
Oh yeah.
This guy came out of the woodwork with posting his position, which, first of all, people critique that, saying it's market manipulation. But I mean, I think that argument is just like whenever it's convenient for people to bring it up, it's market manipulation.
I mean, it is, but compared to like what else is out there, it's like, come on.
Yeah, but like, dude, Elon Musk posted, I remember this like clear as day. I think back in 2019, he posted like Etsy's awesome because he bought like a little what knitted scarf or whatever for his dog, and the next day Etsy stock was up like 19%.
Yep.
It's like
Dogecoin.
at what point it's just like you just have a large following, right? People are gonna find things to degen into all the time. I get it. It's different here because he is the main advocate for GME. I just think that I mean I said this before, and it's obviously it goes without saying that his retail audience, his most adamant followers are his exit liquidity. How did he come up with $180 million position? Which now I think it's like, which I was telling my friend earlier today, it's just really funny the market that we're in because Roaring Kitty yesterday, like I think GME pumped a whole bunch and he had like a higher net worth than Nancy Pelosi. And then I told, and today with Nvidia, I think Nancy Pelosi took the spot again. It's just like, what kind of simulation are we living in right now?
Yeah.
But he couldn't have ever accumulated that amount of money if he wasn't selling at the top and buying at the bottom and rinsing and repeating a couple of times. And so it's just pretty clear you can't really turn 50K into like 200 plus million if you're not doing that. He was
Well,
buying really heavy on the calls and the thing pumps like insanity. It's up 20% today. Like, what is going on? And he sells and then he goes quiet for a week or 2 weeks, buys back at the bottom, and then posts again, his position and it pumps again.
yeah, I mean, it is manipulation, but I it's ridiculous. You mentioned Nancy Pelosi, her husband, what he does for a living, and her being politically connected. It's like politicians, I think, should be able to invest, but only in broad indices. It just you want them invested, and that way they do things that will hopefully make the company better. Like otherwise, it's like I don't know, it's dangerous, but. There's a lot of that sort of not exactly insider trading, but it's about as close as it gets to. There is insider trading. There is real market manipulation. Roaring Kitty is doing, I think, market manipulation, but should it be punished? I don't think so. I mean, unless you're going to say that once you're above a certain amount of following or certain net worth, you can no longer participate in social media ever. It's like, I don't want that world. I would rather we be in this kind of turbulent, fun, topsy-turvy time.
I
Probably
mean,
not real fun for people shorting GameStop. But
it's a slippery slope, man. The guy posted a freaking meme and the thing like shot up 100%. Like what if you say that's manipulate? I understand like the stuff that he's doing now with posting his position and it's like insanity in terms of how big his position is. And like I get that part of it, but I'm thinking about just the initial, like when he came out of hiding essentially, and he posted that meme of like that person leaning into the game.
mhm.
That alone, like, how can you say that's manipulation? Like, I make 2 videos a week minimum about SoFi exclusively. I've made, I think, 300 or whatever videos about SoFi on my channel. If my following was not 10,000 people, but was, I don't know, 10 million people, and I'm still doing the exact same thing, people would then say it's manipulation just because the following is large enough to justify it. But nobody says anything when it's 10,000 people. And so the content hasn't changed. The content is exactly the same content. It's just the magnitude is bigger. Does that make it manipulation just because you have a large following?
Yeah, it's way overblown. And I've actually been, somebody mentioned The amount of power Roaring Kitty has, Joe Doan, uh, with GameStop is almost as big as Roy has with PayPal. Dangerous. Uh, People have accused me of pumping PayPal or being paid by PayPal. I'm like, okay, if they were paying me, which they're not, I think they'd be pretty unhappy with me. If I was pumping, I'm terrible at it. Might as well pump a stable coin, right? I've been accused of that. Pumping Pay USD is like, yeah, I'm pretty sure the stable coin's going all the way to $1, guys. All the way to a freaking dollar. I've been accused of pumping SoFi. You probably have too. And it's like, do you see the stock price action? Oh, do you see this? What?
Like, so the funny part is that now Nancy Pelosi has become like a meme essentially, and the moment that like it's like an infinite money glitch. Anything that she buys, whether it's good or bad, people are gonna ape into that trade right after her,
Yeah.
and so or her husband or whatever. And so the thing is, like when the disclosure comes out, that stock is guaranteed to run 20% minimum.
Yep.
It's the same thing for whatever it was, CrowdStrike. It's the same thing for Nvidia. It's the same thing for everything that she touches.
Yep.
Is that manipulation? It's a legal freaking disclosure that she has to make. Like people are going to be people. Like they're just going to be stupid regardless, or smart, however you tend to see it. Gamblers, let's say, and they're going to ape into the trade regardless.
And I sympathize. Like I made a lot of money from AMC back in the day, so but I really sympathize with people that are in that trade for GameStop, AMC, whatever meme stuff that's out there, meme coins, simply because they want to stick it to the man. Because I mean, you do literally see a two-tiered justice system where people that are rich, wealthy, and powerful, like Nancy Pelosi, like Warren Buffett, with his secret stock for no reason, like there's no justification. It wasn't like he was trying to acquire the company. He just wanted to load up for cheaper. It's like, why does he get that special treatment? The law was created, I believe, in the late 70s, that once you're above a certain threshold, you actually had to disclose your position. And it was done so that there would be higher confidence in the markets. When somebody that's mega wealthy can appeal for a special treatment simply because he's wealthy, no other reason, and he gets it, that does the opposite. It's like, I'm not saying go after Warren Buffett, but there's a lot of other problems in the market. Still invest in the market for sure, but there's a lot of other problems and issues than somebody posting memes, even as big as Roaring Kitty is.
Yeah, I mean, like, I don't know, man. SoFi stock goes up when Anthony Noto buys it. Is that manipulation? Like, it's they're just, unless somebody's coming out and saying, hey, but like what happened with FTX, where they literally had endorsements where people were saying buy FTX, then that's different. But if these people are just acting on their own, best interest, financial best interest, and they just happen to have a large following, it's a really cloudy, path to actually determine that something is manipulation.
So what's this about cruise lines? I did see Chris Patel, posting that. I'm like, cruise lines? Are we sure? I don't know. There's always something out there. Go ahead.
I'm not sure. I don't know what the thesis is. Maybe like a recovery play or more people going on vacation. I'm not sure.
Yeah, when I see things like that, sometimes something's well reasoned. I'll be in it for a short time just for a trade, a very small amount. If I don't have conviction behind something and I've not done my own due diligence, even somebody as intelligent as Chris Patel is, because he is, even though I do disagree with him on some stuff, and usually I'm wrong unless it's Palantir or Snowflake. But outside of that, like I just can't, because what happens is, hey, maybe it pumps. That's great. I don't know where it's going. I'll sell and take my money probably way too early. Or if it falls down, I'm like, I have no conviction in this thing. Like, why can't it just be cut in half or whatever? I'll be out. So, but yeah, you guys do you. If you're going into Carnival Cruise Line or Norwegian, or I know there was a few others that he was mentioning. But yeah, I feel the same thing with, other companies that are pumping that are good. Like Broadcom, I know what they do, but I don't know anything about that business. I would be comfortable being in there unless there's a very, very small position. I'm curious since you have your dividend portfolio is very diverse. You have a lot of names. What level of conviction do you need to have versus just like, hey, they pay a dividend. This is something I don't already own. I'll just own it and take that dividend.
I mean, for me, the dividend portfolio was sort of like an experiment. I really got hooked on it, honestly. So it's 24 positions for me, and I started equal allocation on all of them. And the yield, I think, came out to be something like 4.5%, 5%. It might be lower now because I've just been,
Sure.
um, adding to, like, Apple, for example, is not the same as, I think it's Apple, and then it's like 3M, and then it's Microsoft, and it's Broadcom in terms of the top positions in the dividend portfolio. But yeah, it was simply like a dividend growth portfolio, something that would give me an okay yield and that would give me an okay growth rate. And so far, that's been really fun to follow. I've also totally forgot, like, I wasn't able to. I'm also just saving up. Okay, I saved up money for taxes in April, and I paid off the taxes in May. And so those 2 months, I really couldn't put as much money as I wanted to put in that portfolio. And then all of a sudden, end of June, the quarter is coming to an end. And so I get to go back into my account and take a look at the reinvestments. And, every quarter, I think the first quarter, let me take a look for you. The first quarter was about $612 in dividends, which is like, that's cool, $200 a month. We'll see what the second quarter comes out to, because I put a little bit more, but I really just want to increase that dividend amount where it's like $1,000 every quarter, and then maybe $2,000 every quarter, and just go from there. It was a really nice feeling today. Yeah, I was telling this to my friend where I literally have not logged into the brokerage where I have the dividend account in so long, like
Oh yeah,
over
that's
a
nice.
month easily. And I know that it's just, I'm making purchases every time I get a dividend because it's just buying up whatever at whatever price. It's a nice feeling. I don't know. It's different.
Yeah, nothing wrong with that. I'm not there yet, but if I'd like to actually share one more topic. If you throw Radiance's comment up there on full self driving, I think you guys all know I own a Tesla. I've owned it for about a month. I think exactly a month. We're very close to that anyway. Full self driving. I got invited to that on either Thursday or Friday last week. I didn't think I thought I missed the 30-day trial, so I've been using that a lot. Previously, Tevis, I was telling you that autopilot I thought was so good it maybe would hurt Tesla as far as growing and ramping full self driving, because how much better could FSD be? And from what I was hearing from other people, I'm like, it's a little bit better, but nothing big. No, it is night and day different. I don't know that I'm going to subscribe to it because I still enjoy driving. I don't mind doing that, but it is so freaking nice to get in my car, and I've got a 26-mile commute both ways, and just it already knows since the time that I'm getting in the car that I'm going to work, so I don't have to do anything different. I just hop in. If it wasn't in the garage, I'd have it conditioned for me as far as the climate. I do have that on the way back, but like the full self driving is incredibly capable. There has been, I think, one time outside of a parking lot. Parking lots, it doesn't handle well yet. Parking, it doesn't handle well yet. But outside of that, there has been a total of one time in like maybe 250 miles that I've driven that might have been dangerous if I didn't take over. I don't know for sure. I wasn't letting that situation play out. And then it's done a couple of like, well, it'd be better if it did this or that. Just there's a little bit of phantom braking. It doesn't know how to react when somebody leaves on their turn signal forever and doesn't get over, which, I mean, that's me too. I'm like, what do I do? What do I do? Okay, I'm going to go really fast past them. Oh, they're turning. Also, there's times when it should pass and it doesn't, but a lot of that is just playing with the settings, the 3 different modes, and then whether you want minimal passing or not. And I've got it now where I want it to be, but it handles itself so well. Even today, we had a massive storm that rolled through. Rain was coming down really hard. Full self-driving limited it to the actual speed limit, and it slowed down the amount of traffic. Didn't pass nearly as much, but where there was like a massive puddle and it would have hydroplaned, it went around that on its own. I didn't have to tell it to do that. There were some very tricky situations that it handled as good, if not better than me. And my daughter, who's 11, was with me for many of these rides. She said, yeah, this drives better than you, Dad, which, I mean, maybe she hates my driving. I don't know. But the other big difference with autopilot, beyond all the features that full self-driving can do, is autopilot will brake very hard when it needs to. Full self-driving, it seems to sense like, hey, I've actually got to slow down a little bit. So there's very rare times where it just slams on the brake. It's just the quality of the ride is completely different. I know some people that have owned Tesla for years that had tried full self-driving before, and they're like, yeah, this isn't it, man, that are now hooked and are absolutely subscribing just because it's that good. And I'm close. Like there's no way that, I don't know. I'm tempted to pay 99 freaking bucks to not have to drive the rest of my life per month. That's how good it is. And I never imagined being in that situation unless it was to the point where I could just play on my phone or take a nap or something. We're not there yet, but man, it's really good.
Yeah. We'll see what they how the vote goes and the announcement in August. I'm really excited, man. It's going to be a pretty exciting rest of the year. I think there's so many events to look forward to. It's just, I don't know. It's getting me excited for sure. I think the future is looking optimistic and positive from a market perspective.
Yes.
What happens?
Market perspective. That's a good way to put it, and avoid politics. Let's do that.
Oh yeah. From a market perspective, I'm talking about rates here.
Yeah.
I don't care who wins. Let me see. Okay, so let me ask you this, Roy, just before we wrap. You have, I don't know, $10,000 you find in between your couch cushions. What do you buy? How do you allocate that with your portfolio today? Do you have a new position or do you add existing positions? How do you allocate that?
Yeah, I'm working on that right now. So I have since I've left a job that I was at for 6-ish years, and it performed well. My retirement contributions was I matched up to 5%. So I've got a good chunk of money coming in, no more than I usually have inflowing at once, with a few rare exceptions. So I am probably going to get that in early July, just because Robinhood is so freaking backed up right now, which good thing for a shareholder. It depends what happens between now and then. Likely, I'm going to add just a little bit of Palantir if it's down at its current range. I don't think it will be. I could be wrong, just because I like the portfolio size there. But mostly, what I'm going to be adding is, and I've by the way, I've been adding SoFi incrementally. Probably not going to add much, if at all, even at the current range, unless it really falls. But I'm most excited about starting a new position in Nubank. I want a Latin American play. I think it's vital. Nearshoring is happening. We see the elections are very, very different than in the past. There's a lot of issues. I think there were 33 political candidates, not all for the president, something like that were slain. So there's a lot of gang and gangster type stuff. Cartels are trying to legitimize somewhat. I talked to somebody that their wife is from down there. She has family down there, to try to get a better read on that. But I think that the Latin America countries are poised for a lot of growth, and some of it's just due to the proximity to the United States and nearshoring away from China. And I mean, India will do well too. But I'm like, I want that. And so the easiest way for me to play that, since I don't really know, like Brazil has its own unique messes and its own unique benefits. Mexico, likewise. Argentina, I mean, I like Millet, but I'm like, do I like it enough? So rather than just try to pick one winner or one certain company that's a winner, I see two that are very vital, or very, very valuable. Mercado Libre, which is kind of like Amazon for Latin America, and they also do some banking now apparently. And Nubank, which does banking, and they're in Brazil. They're scaling to Mexico. If they hit Mexico, they can hit every single area in Latin America, and they're also pivoting to some other products. Exceptional execution. I'm like, you know what? Warren Buffett's in that stock. I'm following him, and also Tanner, Warren Buffett of Canada. That's who Tanner is. So new position there. I need to finish my Tesla purchases. I have paused, and I will not add more until we know for sure. Yes, I will not add more. Well, seriously, dude, it's a Latin American play more than Nubank. Like if it was Latin America is going to be really good, I got to have a piece of it. But I need to finish up my Tesla allocation only if Elon Musk sticks around. If he is, then I'm topping off my Tesla, getting it to the allocation that I want. And then I'm buying a lot of PayPal, not just a little bit. Man, I know people think I'm crazy because you look at the stock price action, it's like, hey, this company is going nowhere. That's the stock. That's not the company. They are absolutely killing it with results. Alex Chris is now consistently under-promising and over-delivering. He is a relentless executor. He was with Intuit for 20-something years and 5 years in the SMB business. He's every single little thing, even little things that he promises in earnings or through PayPal to shareholders, he executes on. Every single one of them so far. That's so different than Dan Schulman. They have this huge scale. They're a global massive payments company, and like they're innovating to the point where I ran some of these calculations. Some were based on analyst figures. Some were based on like the Uber. So they got, you know about the Uber guy that they got for advertising?
No.
Okay, so PayPal did not do much with their data before. One of those vectors that Alex Chris came out with is like, hey, we should use this double-sided data, merchants and customers, and actually use that to sell advertisements. The way they do that is twofold. 40% of PayPal users, for some reason, click on their receipt. He's like, hey, why don't we make this a smart receipt and have a targeted ad very specific to them, perhaps even from the person that they bought from, that using the data and using the algorithm matches like what they might buy next based on all this data that we have. It's ingenious. Also, the way that they're marketing it to merchants is like, hey, if you do this with us, you don't pay anything for that ad unless a person actually buys from you. They can use this for branded. They can also use it for unbranded. Very, very good. And then they have advanced offers. That's a similar thing that they use based on the algorithm. Merchants don't pay for it unless it actually executes. So they brought over Mark Grather, not sure if that's how it's pronounced, from Uber. Uber did not have an ad business 2 years ago. It now is looking like in 2024 it's going to hit a $1 billion amount of revenue. And it depends on the advertising, but usually that's like 80% margins, 70 or 80% margins. So I don't see a way. I don't know that they'll have Uber success. I think that they have a good chance because of the number of clients that they have and merchants that they have to have a phenomenally better result than Uber long term. They brought over the Uber guy who scaled this, and you look at his impeccable, not quite a resume, I don't know what you call it on LinkedIn. It's like, dude, there is very little chance that they don't have meaningful revenue accrete over the next 1.5 to 2 years from that product alone. And then I won't go into all the other innovations, but like Fastlane is, like Alex Chris said, best in class. Dan Schulman would throw that out all the time, former CEO, and it's like, yeah, whatever, dude, best in class. I think this is the only product that Chris mentioned that, and it's absolutely mind-blowing the results that they have as far as checkout conversions. Just almost seems fake, but it's not, because we've seen that from other clients. So I don't know, man. Like unless the macro completely falls apart, yeah, we could sit here for a year. We could sit here for 2 years. I'm just going to be buying shares. I mean, I might buy like 5% leaves just for fun, but my shares can sit there and be dead for a bit. But like so going back real quick, and I'll turn it over to you. The AVGO thing was like, which of these do I think can double the quickest? PayPal or Broadcom for right now. It's like, I don't know who's saying Broadcom. You have to have a very sour view of PayPal. PayPal, easy, like easy money. Opportunity cost, maybe. It could be, but it's just not very likely. So that probably is going to get half of the money that I have coming in, and it's a good chunk.
Okay, so a small allocation to Palantir,
Tiny.
uh,
Yeah.
yeah, an allocation into PayPal,
Yep.
and
New
buying
thing.
new.
Yeah.
Do
Uh,
you have a new position right now, or is it or is
no.
it gonna be a new position?
Um, I like the pun there. No, I've been interested, and I'm just waiting for the funds to hit. I want to make sure Tesla is where it needs to be first. And if we get the vote going well, maybe it pumps to like 220 or something like that. I don't care. I will buy freaking Tesla at that point. I will average up. That's fine. Um, Tesla, like I, again, that's another one that can be opportunity cost. It has been over the last 3 years. You have a big Tesla position, but I'm not looking at 3 years with Tesla. I am looking when Tesla has its Dojo AI send out these bots, the robo taxis, all of that, and takes over the freaking world, and then we have to live on Mars. Maybe not quite, but
Yeah, you'll be waiting a while for that. But the thing is, like the market prices these things in, right? And so right now you have a Tesla price that has that uncertainty built in with regards to the vote. The moment that vote passes through and is, let's say Elon wins the compensation package, I think this thing's going to be sorry, I saw an auto workers comment on Wells Fargo. I think this thing's going to be like over 200. If Elon loses that vote, I think it's instantly going to be 150 and then even less than that. And so right now at 175, you're sort of in the middle of the road, and that's going to fork in a week or two. The moment you have that announcement in August, if that's going to blow people away, it's going to be reflected in the stock price. And so the point that I'm trying to make is you get the premium, you get the alpha by taking on the risk with regards to Tesla. So I mean, I just DCA more. It's gotten to that place for me with Tesla where it's such a large position, disproportionate to the rest of my portfolio, where I'm like, I don't know, like I always will add more. Like I love adding more, but at the same time, I'm like super picky about the conditions that I want to add more. So.
so two quick questions. One is, do you feel differently when a position is large because it's run up? Like you're okay with that versus like just through allocation, like with Tesla recently, I would suppose.
What do you mean?
So let's say Tesla does nothing for the next 5 years. You keep adding to it. Does that feel differently as far as like what you're comfortable with allocating versus like so allocation level versus actual amount? So for me, Robinhood is number two position. I think it's up to like 15% of my portfolio. I would never have allocated up to 15%. I allocated to five, but it's freaking exploded. So
Right.
I'm good with that. Is there any
No, it's
feedback
mostly
on that?
like it's mostly just the concentration in the portfolio that
Sure.
is the main thing for me. Obviously, if there's a company that is doing so, I had a bunch of positions that I sort of bought at the peak in 2020 that just completely ate shit, and that was a learning experience, and that's all fine. What I've done is I really became super scrutinous in 2022 on those positions because a couple of them were, money losing companies that once the funding ran out, essentially, that wasn't, a good situation for them. And so you can just assume that I lost all my money on those. But a couple of them, the underlying company was still profitable and growing and looking like a trajectory very similar to SoFi's, right? Like Lemonade, for example, is one of those companies. And Lemonade went from, $70 to 100 and something dollars, and now it's like $17. But the company underlying keeps executing. And so I'm like, okay, well, I want to average down on those companies because they're still executing. And I
Yeah.
want to just not touch the ones that are not executing for averaging down, even though they're super cheap, because I'm just like, well, why? Like I took a bet, a gamble on those, and those ones didn't pay out. But I want to average on companies that are still executing. Tesla, I think, is absolutely still executing. They're still growing. They still have good metrics. Obviously, we have to see, what the catalysts are ahead. SoFi likewise.
Yeah.
And so it just becomes a matter of allocation or concentration in the portfolio for me. I think like if I had the same like $10,000 to spend, I would probably build a stronger position in Celsius, quite frankly. Um, I think that one, like I like the name and it's small on running as well. I started buying that like at $31, $32, and now it's let me just check, $42 as of close. And so it's up, a good 20% or so. Actually more like 30%. So, that's good. I might add some to that. And then for the dividend portfolio, it's like a different thought process altogether. Like I'll just add to that portfolio regardless because I just want to, it's more leveled off. I'll add to things proportionately, whereas the growth portfolio is just concentrating into 3 or 4 names.
Yeah. Yeah. Dream, I think, has it there. Tesla's becoming a sleeper at this point. That's not
Mhm.
going to make you wealthy. Sometimes it happens. We see like Apple, if you actually look back, it sits there for years, does very little, and then a lot of appreciation. That's not very uncommon in the market. It happens. So we'll have to see what happens. Hey, I hope everybody that's watching here gets $10,000 that they get to allocate however they want. So Tevis, why don't you send that out to all our viewers? And
Yeah, 10,000 each. I mean, there's only 68 of them in that are watching, so
there
it's
you go.
not
I mean, that's pocket change for you, right?
that big of a dent, I guess.
Yeah.
Thanks everybody for watching the Bootleg Weekly. We're happy to be back. We're probably going to be exploring different times to see what sticks for us. Probably later in the night, like 9:30, 10. Let us know also what you think. Feel free to just send us a DM or add us on X. And we'll be back next week for more things to talk about. That's it. Bye.